Hey there, amazing traders. How is everyone doing? The quick one, the reason for making this video was because I was going through the comment section on the last video I posted, I think about yesterday, and someone wrote, bro, your videos are great. Quick question about the way you say trade in the direction of the trend and with market structure. Can you make a video to explain it more? So about market trends and also market structure and the direction of the trend. So um this is the reason I am making this video, to explain to you guys. Yes, this is how to know the direction of the market trend. When you know, we are swing traders, and as such we have to follow the trend when it is about to start, not joining from anywhere, not joining from any angle. You have to know when the trend is about to start. You have to know how to go about it, to see your candlestick patterns, to see your chart patterns from the higher time frame perspective. You have to also to be able to understand that yes, this is this market is very, very dynamic. You have to always ensure you are on the right side of the market, always keeping in mind that yes, even when you lose your trades, it's a normal thing. Everybody loses, everybody has losses in their trades, and you shouldn't base your mind that you're not going to win always. Yeah, just base your mind that you are going to lose always, but that doesn't mean you are going to lose all your trades. You should always understand how the market dynamics works, and to be able to make good trading decision. So this is one of the reasons why I'm making this video, to explain to you guys that yes, this is how to know when a market trend is about to start. Also to talk about market structure and what to understand by it. So without much talks, let's dive into our chart and then understand what um what market trends and market structure talks about. So on my chart right here now, we have S&P 500. I felt like this is the best one to explain to you guys about market structure, about the beginning of a new trend. We are currently on the monthly time frame. I'm going to go quickly into the bearish and the bullish trends we have. We all know the chart patterns to look out for when a trend is about to um, when a new trend is about to start. We all know um, those key things we should know about the higher time frames, because we come to the reason why we come to the higher time frames is for us to make good trading decisions. We don't trade on the monthly time frame, we don't trade on the weekly time frame. We come on these higher time frames to make um, projections into the future. We come on the monthly time frame to basically look at the overall view of the market, to understand what the market is really, really doing. You understand? We come on the monthly time frame to pick and guess which setups will be the best for us. So I want to quickly explain what is um I want to quickly explain what is market structure in a nutshell. Market structure is when the previous structure is violated, um, being it an uptrend or a downtrend. Like in the market, we have in a downtrend. Basically, let's start with the downtrend. So in a downtrend, this is the market structure for a downtrend. This is the market structure for a downtrend perspective. This is the market structure for a downtrend perspective. So why do we call this a downtrend? Because first of all, why do we call this a downtrend? Because first of all, this was a high. This wasn't when this was trading here. This wasn't a confirmed downtrend. When this was trading above this support used as resistance, when it was trading above it, it wasn't in a downtrend yet. But what made it to be a downtrend? I'm going to be very, very quick about my explanations because I don't want the video to be long, and I also have a lot of things to do um, right after the video. So when it was trading above here, it was still a bullish market because it came from down to the upside. When it was trading above here, it was still a bullish market. So why do I call it a downtrend now? Is because the market has broken the previous low and then it has broken the support, came back and retested it. Now this is now a low. This is now a low. This is the market made a high. This is now a low. Where do you start calling it a lower high? This was a high, this was a low. Then this is now the lower high. This is the beginning of the downtrend because when you are looking at the market can do this, break it, then come back and close right above it, and then continue going up in that direction. So when do you call it a lower high? Is when the market has broken the previous high, which is on the support, broke the support, comes back to use it as a resistance to then go down. This is when you allow, we don't trade off from the support, we don't trade off from the resistance. We allow the market to bounce off from these regions. The support and resistance are mainly there to guide us not to take bad trades. So we don't trade off from support or from resistance. We wait for the market to bounce off these zones for us to make good trading decisions. So this is the market structure I am trying to explain. Bearish market structure I am trying to explain right about now. So we made we made a support on this support line. Market made a high, came, broke the previous support, and broke the previous resistance, came back, pulled back into the support, used it as resistance. This is where we now place our sell order. This is where we now place um our sell order. That is after we've seen candlesticks rejections like the pin the bearish engulfing. This is a downtrend after we've seen something like that. This is why I always refer to it as trading in the trend of the market. Of course, you know when the market is about to change trends, when you understand market structure, when you understand the dynamics of the market, it's not really hard. It's going to take a while if you are really, really serious to pick and choose the right pairs for you to trade when the trend is about to change. So this is very much of what I follow each day. I show up to the screen, look at the market structure, come on to the monthly, first come on to the daily, second, and then I come on to the weekly, second, then I scale down to the daily to see if the daily aligns with the monthly. If the monthly is bearish and the daily is bearish, it's a good sell opportunity for me. But if the monthly is bearish and the daily is still bullish, I'll wait for a correction of the daily chart to be corrected to the monthly so I can sell alongside the monthly. In that way, you are guided by the trend of the market. That's why I that is what I mean by trading in the trend of the market. It saves a lot. It helps you. It helps your psychology in a very very positive way, other than taking trades from any angle in the market at all. So this is for a downtrend. Same thing applies to an uptrend in the market. um when you get a break of structure, pull back to the previous structure level to retest it, break, pulls back to the previous structure level. Sometimes the market doesn't pull back to the previous, it's try to take out orders, that is try to take out orders, sell orders and buy orders. If it's in an uptrend, tries to do a whole lot of. That's why it is always good to allow the market do its thing, show you that direction it wants to go to, so you can very much follow it to whichever way it goes to. So sometimes it does like that, sometimes it comes back, retest the previous structures and then continue going down. And when the trend is about to change to bullish, you have chart patterns to guide you. Chart patterns are the only way, not not the only way, but then we do have candlestick patterns. But chart patterns are the most used and strong ways to know trend reversals. We have the double bottom, we have the inverse head and shoulders, we have the normal head and shoulders, we have the double tops, we have the rising wedge, we have the falling wedge. But those ones are not really really important in what we are seeing, because they don't help. We don't normally see those ones occur. But for the double bottoms and the double tops, the double inverse and normal head and shoulder patterns we do have, those are the ones to take into consideration for trend reversals. Um, as swing traders, you have to be able to understand when a new trend is about to start. So when a new trend is about to start, as a swing trader, you have to understand in order to get in on time. Let your stop losses be very very minimum to win big. Like if you have a stop loss of 50 pips and then you are targeting about 600 pips, that is a very very good risk to reward, which is about 1 is to 9 thereabout, or 1 is to 12 thereabout. So as swing traders, we should know when the trade the trend is the new trend is about to start, because that is really when we enter with very little lot size and then keep on adding positions when the market goes from where we entered, locking in the first entry we made at the beginning of the trend. So that is very much. We'll hop on to the S&P 500 chart so that I can explain to you guys more of what I've said on the market structure. So this is the S&P 500 on the monthly time frame. So this is the S&P 500 on the monthly time frame. We can have it as the market made a very significant chart pattern. If you go on the day on the weekly time frame, the market made a very significant chart pattern, which is the inverse head and shoulder pattern, which the market broke out of the neckline, and then we had the pullback, also a Fibonacci extension point. um this was what we had here. This was the neckline of the inverse head and shoulder pattern. We had the break. Let's go to the weekly time frame. So this was what we had. The inverse. This is the left shoulders. This is the right shoulder, and this is the left shoulder. This is the head, and this is the right shoulder. So this was the reason why I chose to buy S&P 500, and very much we were on this support level, also the neckline of the inverse head and shoulder. When before this took before this took off, we were very much on this support level when I informed you guys about the trend reversal, because we broke out of the neckline and then we had a pullback, which we also traded this pullback because the market made a high, made a low, made a lower high, then made a lower low, made a lower high, and then we very much took out our positions from the neckline of the inverse head and shoulder. This is when you understand market structure, you can be able to make money in any direction of the trend. But if you don't understand it, you are going to just be following the trend blindly without knowing what you are really doing in the market. So this is the neckline, also a fib extension point where price came in and also rejected. This is the neckline, also a fib extension point of 0.50% and 0.618%. Um, so this is how I come on the monthly time frame to look out for these chart patterns, to look out for these candlestick patterns, whether it's the morning star, whether it's the evening star, whether it's the inverse head and shoulders, the double tops and bottoms. Come on to look at trend reversal patterns, the ones I spoke about, and the ones I spoke about at the beginning of the video, for us to join the trade and also join the trend at an early stage in order to stack up our positions when we get um when we get a reasonable pullback while the trend continues to go in our direction. So this is very simple when you understand market structure, when you are trading in the direction of the trend. What did I say at the beginning of the video? I said when you come onto the monthly time frame, you want to look at the overall picture. This is the overall picture of S&P 500 for how long we have been going bullish, for how long, since 2009, for how long we have been going bullish, making higher highs, higher lows, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So we made an equal low here, and then we came on here and we put a higher high. Then we put a higher low, also a Fibonacci extension point. If you draw your fib from swing low to swing high, this was the swing low. This was the swing high we had here. If you draw your fib from swing low to swing high, this was the pullback which gave rise to the inverse head and shoulders we had on the weekly time frame. You can't see it on the monthly time frame that clear, but you can definitely see it on the weekly time frame. Let me get the two so you can understand what I am saying. Where are you? Where are you? God, I hate looking for this. Yeah. So found it. So this was the pattern we had. The inverse head. This is the head, and then this is very much the left shoulder where the market broke out and pulled back. Also into the 50 and 618 Fibonacci extension region for us to make good trading decision. So that is very much for S&P 500. Come on the daily is where you look for opportunities, candlestick patterns, and see we saw the morning star formation form here. You can't really see it that much, but this was a bearish. This was kind of looks like a pin bar, and then we had the bullish engulfing candle which made about over 400 pips to the upside. So what did I say? First of all, come on the monthly time frame to get the overall picture of the market. When you get the overall picture of the market, now you are satisfied. Now you know what you are doing. Now you have known the direction. You put that down into your journal. The good thing about discipline is when you have gotten discipline, you don't need it anymore because you're just going to be repeating it always. You're just going to, even if no one tells you about it, you're just going to be repeating it always. When it is the weekend, the first thing I do when I open my chart on any pair at all, I come on the monthly time frame to get, no matter how I've done it, I must always come on the monthly time frame to get the overall picture of the market, to understand basically what I am doing. What am I going to be trading in the market? Am I going to be joining the bearish team, or am I going to be joining the bullish team? So this is how I make good trading decisions and big pairs. Note that failures happens, but when you are able to understand that this is a game of probabilities, this is a game where um, you are you are right in your own senses, but the market shows you that you are also wrong in your own senses. But that is fine. You have to always understand that yes, this is a market of different possibilities. Even when you've done your technical analysis very well, you have to also watch out and manage your risk very well, predominantly over what you see outside there. You have to always manage your risk, manage your money, and manage your trade. That is the only thing for a long run, for the longevity of your own stay, for your own longevity stay in the market space. So that being said much, this is a very simple concept to adhere to. Like I said, the good thing about discipline is when you've done it over and over again, you don't need discipline again because you're just going to continue repeating the same process every day, every day, every day. When you show up to the market, you're going to repeat. It's just like every day you wake up in the morning, you take 25 liters of water. Every day you wake up in the morning, you do it consistently. That even when you wake up in the morning and you don't remember it, you are going right into your fridge to take 25 liters of water and you'll be like, oh, I've taken this. That is discipline. You don't need it anymore because you have done it over and over and over again. So it's basically doing it over and over again. When you open up your chart, you must first of all come on the bad guy, which is the monthly time frame, to get the overall picture of the market, to get the overall picture of the market, to understand where the market is going to, the market trends and stuffs like that. So this is very, very explained. And then um, tell me what more you want to see. I'm here to serve you guys. I'm here to help everyone. I'm not going to be charging anybody. Soon, I'll be doing a free university course, like something like Eddie Chooks University. It's just an update for you guys. Whosoever is interested um, to join for free. I'm not going to be charging anything for this. Is like I said, this is a free knowledge. When I die, none of those things are following me to my grave. So we just live free. We just live happy. Everybody's making money. Time will come. Yeah, everybody will be making money. Everybody will be free. Everybody will be satisfied. Everybody will be contented. But what is funny about the world is nobody's going to let me do that because there are those outside there um, who are willing to see me suffer what I do. But God is not going to allow them to. do it either. So I'm going to do what is within my capabilities to do, and God is going to do the rest. Like I said, I am here to serve each one of you, to help each one of you at any time you need help at all. Trading, teach you how to trade, um, help you understand the basics of trading, help you understand everything you need to know about trading. So that is very much for this video. Hope you guys have an amazing day. Thank you.